Hello and welcome to Hot Money on Bloomberg Quint Live, India's first digital live streaming business news service. This is a show which gets you a complete wrap of all the stocks that are buzzing in trade. I'm Darshan Mehta. Let's welcome our guests on the show. Joining us today are Foram Parekh of Indiabulls Ventures, Sameer Kalra of Target Investing, and Avinash Gorakshakar of Joindre Capital Services. Many thanks to all of my guests for joining me. On the show today, we discussed Bajaj Finance and Bajaj Finserv. They were the top losers on the Nifty yesterday, though both are staging a rebound after Bajaj Finance put in a clarification as far as their quarterly update, stating that the AUM grew 41% compared to last year. So we'll discuss both these stocks. IT companies begin the earnings season today, starting with TCS. We discuss the expectation with the analyst for TCS and what it will mean for the IT sector. We discuss SBI and whether it's the best PSU bank to own in the current scenario. Yesterday, the PSU banking index was down almost 5% in trade. And finally, we discuss the latest listing that is there, and that is IndiaMart. So what should one do? The counter has managed to do well. What should one do? And that is something that we are talking about. Let's start with the first one. It's very interesting. Now, Bajaj Finance and Bajaj Finserv, both of them fell in 10% yesterday. Now, the news came in is when Sanjeev Bajaj gave an interview to a TV channel indicating that there was a potential slowdown in the sector and probably first quarter won't be that good, and the counters fell 10%. Now, a clarification coming in from Bajaj Finance indicating their first quarter update, in which they have said that there's a 41% growth in AUM on a Y-on-Y basis. So there has been a pickup as far as the share price is concerned. But the bottom line still remains, whether it fell 10% yesterday or moved up 6%, are valuations now challenging for both these companies, because remember, they're trading at premium valuations compared to the NBFC sector, which is actually getting plagued by a lot of issues. So that's something we want to ask again. So Avinash, the move, okay, it pretty much evens out. Yesterday 10%, today it's managed to move up 7%. It's pretty much where in that range now. What's your sense? What should one do on Bajaj Finance and Finserv? Are you concerned about the valuation, or are you impressed with this 41% growth that they spoke about?
No, I think Darshan, first of all, this quarter one number which has come in today, is quite surprising, considering that yesterday there was a kind of statement made by the managing director of Bajaj Finance that clearly there is a slowdown in consumer durable financing. I would believe that, of course, these numbers definitely obviously remove a great amount of uncertainty as far as the Q1 numbers are concerned. But as far as valuations are concerned, I think any negative surprise, going forward, a company like Bajaj Finance or Bajaj Finserv, to grow consistently at around 35 to 40% on a larger base is not a very easy kind of, situation. And our sense is that, although the longer term, benefits of, financial penetration still remain quite large, in the near term, hopefully if this growth rate waters down to roughly about 25 or 30 odd percent, the markets would definitely give it a big thumbs down. And I think at these valuations, if you look at the risk reward, at least in the near term, most of the valuations seems to be capping whatever earnings growth recovery we are speaking for FY20 or partly for FY21. So I would prefer to hold on. I wouldn't buy fresh into the stock and probably wait for the quarter one numbers to be out, what kind of management commentary comes out, because there's been a noticeable slowdown in financing, and especially after the ILFS issue, liquidity within the NBFC space has seen a major crunch.
Okay, that's the view that's coming in. Foram, what's your sense? It's been all over the place. What should one do on Bajaj Finance and Finserv? Are you concerned with the valuation, or are you happy with the growth that they're showing?
We do have a buy call on Bajaj Finance, and that's purely because we see there is a lot of stability in the stock. Both the Bajaj twins, we feel that it's par valuations because there is sort of certainty which other stocks do not have. Now, in the microfinance lending, B2C especially, there are very few players in this area. And if you see, Bajaj Finance for a very long time has been maintaining very good growth on a higher base. Now, even today, clarification which the management has made of AUM growth of 41% on a yearly basis, and I think 12 or 13% on a sequential basis. I think it's a very good numbers, and not many companies are able to report such set of numbers. So, and specifically in Q4, where we really saw a consumption slowdown, during that period also, when Bajaj Finance could report excellent set of numbers, now we are seeing consumption being picked up, especially in the two-wheeler side we are seeing, and few of the FMCG companies companies, they are saying that volume growth is picking up, though not the situation that it was in Q4. So now when the situation is improving, then we feel Bajaj Finance will continue to report good set of numbers. We were a little surprised yesterday that, when the CMD spoke a little negatively, but then looking at the numbers, we feel that because there are very few players in the segment, we feel that Bajaj Finance will continue to hold the premium valuations over other stocks.
Okay, you think, since you all have a buy recommendation, you think that given the slowdown, what we've seen and what probably will be reported, and the competition now picking up, maybe HDB Financial or the other one comment, it can continue to grow at this level? Because yesterday's move just shows that when a stock like Bajaj Finance falls 10% on a slightly negative comment, which means there's absolutely no room for error.
Yeah, so HDFC is a good, player. But then if we see, there is immense potential in this sector. And Bajaj Finance has still not, penetrated the entire pan-India. So there's a lot of scope, and the fact that there are only 2 or 3 players, including my group company. So very few players in this segment. That is why we feel that Bajaj Finance will continue to report, healthy set of numbers.
Okay, Samir, what's your sense on the entire scenario? Which way are you on, valuation or growth?
So I think, they have given the growth, that's why they sustain the valuation. There is another addition to the valuation, is that they are the only, let's say, high quality company which is exposed to this sector on a standalone basis. And if SGB, which they plan to list very soon, that kind of a premium gets out of Bajaj Finance, because the growth at SGB Financials is also very high, and the quality is at least the same, if not better off. So I think the valuations, at least on the unlisted market, is going higher to SGB Finance. What I believe that what happened yesterday and what happened today, there is a uncertainty in the future outlook growth. So I would take this opportunity to lighten my weight. If not totally exit from the stock, lighten it up, because there is a consumer demand issue. See, Bajaj Finance never faced a fundraising issue. There was never a fundraising issue with this company. The only problem is now if your consumer demand goes down, then this kind of a quarter-on-quarter growth, because when you're trading at such valuations, quarter-on-quarter growth is much more important than YOY. YOY base impact you are able to sustain, but the quarter-on-quarter growth gets into a panic system. And I think these kind of valuations will subside once SGB gets closer to the IPO. So it's a better place to exit, at least to some amount, if not at all.
Okay, similar case to FinServ also, would that be a similar case?
So FinServ was taken as mainly exposure to Bajaj Finance on a holding discount basis. So and insurance businesses are still not picking up that highly, and Bajaj Auto is showing a slowdown in the retail sales as well. So I figure out it's a better place to exit, lighten the positions on both ends before if you're taking a review ahead.
Okay, that's the view that's coming in on the Bajaj twins. Next, we all set with the IT season, earnings season, in fact, with TCS reporting its numbers today. What's the expectation? Obviously, the preview does indicate that there could be a revenue growth, but on the margin front, yes, there is a decline that is expected ahead of the earnings. TCS is down almost 2% in trade, and TCS probably will set the benchmark on how the IT season and the earnings season will pan out. Foram, what's your expectation from TCS and the IT earnings season? Are you also concerned with some bit of margin pressure that could come in?
Yeah, so we definitely feel margin pressure would be there, because Q1, as we all know, there are wage hikes and visa costs and everything, which will definitely have an impact on the margins. But at the same time, we feel that digital revenue will continue to grow at a higher pace. Last quarter, we saw for TCS, digital revenue grew by 50%, on a yearly basis. Of course, because they have a lower base, but then, they still continue to have a lower base, and there's a lot of, opportunities in the digital segment. And even last quarter, quarter management did guide it that they are looking at very robust and healthy deal wins for the digital space. As a result, we feel that digital revenue will continue to grow. Margins would take a hit, but then utilization rates, if we see, it's maintaining its up move at more than 80% utilization rate. Deal wins are good. Diligenta issues and all, the BFSI segment for TCS is being improving steadily. So if we give margin a little, setback and look at other parameters, TCS augurs a very good buy post this correction, and the kind of market sell-off we are seeing right now. I think rupee will make a base near 69.70 to a dollar, and that is why from next quarter onwards we should see healthy hedge for them at a realization value, and that is why I think TCS augurs good at current market price.
And that would mean good news for the entire sector if TCS does manage to, or will it be a case by case basis?
Yeah, no, it would be a case by case, because if we only compare TCS and Infosys, TCS is able to sustain its growth, but then Infosys is not able to sustain. If they report good set of numbers, then it would, we would again look at re-rating Infosys. But then I specifically believe it's going to be company side, because not all companies are able to attract deal wins. If we look at Mindtree post the acquisition of L&T, there are challenges because it would not fetch the orders that it is to fetch earlier on account of uncertainties. So company wise it would differ, and currently I am little safe, or rather I feel TCS is a better pick over other large cap companies.
Avinash, what have you told your clients to watch out this season, at least for the IT earnings and TCS?
No, I think clearly, this quarter numbers are going to be a mixed quarter. I won't be surprised that, the margin compression has already been factored into the markets, but what sort of deal wins, TCS is managing to actually win in this quarter is very crucial. And most importantly, how are they positioning themselves in the BFSI segment? I think digital is one story which is continuing to look good. I would believe that at best, Darshan, over the next, say, 2 quarters, TCS will be a market performer. I don't think you're going to see any firework kind of performance either in the June or the September quarter. And clearly, I think what kind of US market headwinds throw up, I think that is going to be the key kind of factor which is going to re-rate the stock. At least in the near term, I think valuation seems to be moderately okay for the stock. I wouldn't sell the stock, but yes, we have been telling our clients to hold on. No fresh buying at these levels.
Okay, and what have you told your clients on TCS and the IT sector?
So we've reduced the weight on IT because we believe, margins are now becoming more of a quarter-on-quarter issue. Because their hiring is more onshore, especially in US. That increases their costs, and the revenue per employee reduces, and the operating matrix per employee also reduces in that sense. So the efficiency of the new employee addition is going down. So whether you are able to sustain that kind of a growth is one question, because the further deals wins are not that high margin deals. So your eventually margin pressure will come through in next couple of years. Secondly, I'm more concerned on what they reply on the buyback tax. So as a large cap IT investor, I give them a kind of a premium on the valuations, because they have a cash utilization towards the investor as well. Now, if that 20% they are going to take an additional hit on the buyback proposed every year, then the EPS gets impacted. If they are going to include that 20% into the buyback amounts which they were announcing, then my returns get impacted. So automatically I'll wait for that to take a call, and next couple of quarters I'll look on the margin pressure, how they are able to sustain.
Okay, that's the view that's coming in on the IT sector. The next thing we want to talk about is the PSU banking space. Now, one of the worst hit in trade yesterday. The PSU banking space, there were a lot of expectation of any kind of recapitalization that would come in the budget. That didn't happen, and then most of the PSU banks got smashed after that. Yesterday also the PSU banking index was down. Counters even like SBI were down. Some of them like PNB were down almost 10% in trade. Today it's managed to rebound. But this brings us to that question when most of them are suffering. SBI is trading at record highs. So is SBI now the best play that you could take on the PSU banking space, or are there other stocks that you should now look at, because considering the move that SBI has taken? Samir, I'll start with you. Is SBI the best play, or would you play something else on the PSU?
So SBI is like a HDFC Bank for PSU Banks. It's
Okay.
a consistent performer. There's no kind of that much of downside risk surprise over there. But yeah, now valuations are kind of bit stretching ahead of what the market share gains or people are estimating for them to gain on. I feel Canara Bank is one PSU bank where my interest is coming as an investor as well. Because if you see, the new MD has come from Vijaya Bank, and if you see Vijaya Bank financials on a longer term, they have been sustainable at a very good pace. Canara Bank is doing good through its subsidiary in Canfin Homes as well. So I feel the package over there is, if you see alpha-wise, next couple of years will unfold much more better than SBI or any other bank.
So that have you suggested buying Canara Bank to your clients?
We have started buying a small chunks of it, but not in a bigger way. We are still looking for next 2 quarters performance.
Okay, Foram, what's your sense among the PSU banks? What have you recommended to your clients to buy?
We have recommended SBI, but then we also feel that Canara Bank is good. Apart from Canara Bank, Indian Bank is also good. And if we look at the entire PSU pack, most of them post the recapitalization earlier, which was done, has been very benefited to them. They have started, like their provisions are now, declining. Asset quality is improving. Many companies are just, about to report profits on a quarterly basis. So we feel that the scenario for the PSU banks are improving. Even the smallest bank like Bank of Maharashtra has been reporting very good set of numbers post, the recap, what it has got. So I think SBI at the moment is quite stressed because, we just had 2 options, SBI and PNB. PNB has its own set of problems. So the only option left was SBI. But now Canara Bank, Indian Bank, all these banks are picking up even in terms of their NII growth and AUM growth. So I feel that once Canara Bank, I think it's just about to turn black. And once they start turning black, then demand or rather buying would again come in Canara and Indian Bank.
Okay, what's your sense, Avinash? What in the PSU banking space have you told your clients to buy? Is it only SBI or other banks like Canara, which you spoke?
No, in fact, SBI has been a good preferred choice by us. I think it's been one of those PSU banks which has outperformed quite well. Clearly, I think if you see the Q4 numbers, disbursements as well as the loan book growth has been quite impressive. More importantly, we are expecting that in FY20, a lot of NCLT announcements and settlements would actually give them a decent amount of settlement money. But I think clearly within the PSU bank space, another frontline bank which we like is Bank of Baroda. I would believe that now since the merger is over and a large part of the provisioning got made in the 4th quarter of this year, I would believe that probably FY20 would be a consolidation year, and after that we could see a decent kind of growth for Bank of Baroda. I think looking at the current price, Darshan, this could be a good pick from a longer term point of view. After SBI, we have been recommending Bank of Baroda to our clients.
Okay, that's the view that's coming in. Counters, apart from, I think SBI seems to be the consensus bet on the banking space, but Canara Bank, Indian Bank, Bank of Baroda seem to be also featuring in the list of our guests. The final stock we want to talk about, and that is IndiaMart. Now, it had a stellar run as far as the markets are concerned. It's been managing to do well. It's managing to hold on about the 1300 level. Is it a stock that you should buy? Remember, it came in at a much lower rate. It's trading much higher at this point of time. But what should one do with IndiaMart? Avinash, any sense? Have you studied this counter? What does it offer?
No, in fact, Darshan, the offer which came in recently was an OFS offer. So I would believe that I think we have been telling our clients that we would prefer to wait for at least 1 or 2 operational quarters for the company to put out, because if you see the last 4 years they were loss making. Only last year they became profitable, and this company probably cannot be valued on a pure PE multiple basis. Even on the EV to EBITDA basis, valuations are pretty expensive. I think almost 30 times over that. So I think I would prefer to wait and watch. We have been telling our clients to not enter at these levels, which look to be quite pricey. It would be better to actually wait for maybe 1 or 2 quarters of numbers and then take a conscious call whether we want to take a view on this sector.
Are you concerned because we've seen not a lot of these tech IT or tech platform companies are listed. I think the only one that's managed to do extremely well is Info Edge, which has done well. But there have been concerns about the growth trajectory of Infibeam or a Just Dial. So
Exactly.
Is that a fear that you would have?
I think that is the key fear, because if you talk about Info Edge, Darshan, I think clearly they have been seeding very strong businesses, and I think it's a more sustained, solid business model. So I think in case of IndiaMart, it would be better to wait and watch for at least a couple of quarters. I think probably I would believe that when you give these kind of high valuations to such companies, earnings growth, return on capital employed are parameters which I think need to be looked in very closely, and these need to be sustained over a longer period of time. So probably it's better to wait and watch rather than just moving immediately at the current price.
Foram, what's your sense? IndiaMart, did you get a chance to look at it and what it offers?
Yeah, so we had seen IndiaMart, and we had also recommended a sell or avoid on the IPO, but then it had a bumper listing, and post that also it managed to do quite good. But if we look at this, I second to what Avinash says, because when you have such premium valuation, each and every parameter should be good. Even the margin increment should be there even on a quarterly basis. So now when we are seeing that even DMart cannot sustain its margin post the kind of exorbitant valuation it earns, I think likewise even I would want to watch for quarterly earnings for IndiaMart, and absolutely the kind of valuations they had bought in even for listing, it was too high. And when we have other counters which are justifying their premium valuations and has a good track record, and in this kind of scenario when there are plenty of stocks which have been beaten down and we have attractive valuation stocks available, I wouldn't want to go and buy exorbitant valued stock at current market price.
Okay, Samir, what's your sense? What's your sense on IndiaMart? What should one do?
So I'm neutral to it as of now. The business structure is there. The monopoly is kind of set into B2B. They're more into the wholesale distribution, and there are a lot of now small shops which use them. But I'm a little skeptical on the competition coming ahead, because if you see, a lot of people are now getting into B2B online distribution. Even the government is coming into the online MSME space. So where the competition kicks in, and next couple of quarters, if they don't support the valuations you're trading at, there's a risk of coming down drastically. So I think whoever has it can exit it for a while, because I don't see much of upside before first quarter post listing comes in and performs well.
Okay, that's the view that's coming in on IndiaMart. Obviously, there needs to be more time that's to be given and see the financials that come out. But at these valuation, there seems to be a bit of caution as far as our guests have on this counter. But with that, it's a wrap on today's edition of Hot Money. Many thanks to all of my guests who came in today. Samir, Foram and Avinash, thank you so much for coming in today. Ask BQ comes up next. Stay tuned to Bloomberg Quint.